All right, welcome back, everyone. Let's do a quick Bitcoin update today. Um, First thing, we all know that FOMC is today, and it is 2 to 2:30. So we've got that coming soon. We're expecting a pause. We'll see what the data comes out. Expect some volatility. We're going to skip the daily chart as nothing's really changed on the daily or the 4 hour, but we'll start on the 4 hour. We have our 4 hour low potential break at this low here, and our 4 hour high for another potential bullish break to the upside. Now, in these scenarios, if we break down here, I'm going to look for a solid break and to back test. So it'll look something like that. And we backtest some order blocks creation to take it down further. And what we want to see there is this swing play from golden pocket, usually to golden pocket. Sometimes it'll stop at the 0.5 here. Sometimes it'll go to the golden pocket. Other times it might have a deeper retracement down to the 786. But either way, we're going to watch each level to see how price interacts with those levels. But what we're looking for is we had that daily break of structure. You have the expansion out of this range. So we want to see this range, initiation out of the range, come back down to mitigate this old range for a continuation to a new high. So that is the overall high time frame plays and scenarios to the downside to take it to basically create market structure in a simplistic form. You broke here, made a new high, making a higher low for a higher high. Simple as that. So if we come down and zoom in on the 4 hour, you're basically going to look at the same exact thing if we go higher and break this 4 hour bullish structure. So we're wanting to see this break, and we have a range here. So we have the initiation out of the range, come back down, mitigate this range for continuation to a new high. So that is the basics of that market structure if you want to look at it just from range expansion, range expansion. That's all the market is. So if we come in here and let's zoom back out. So this high to this low, we are currently at the golden pocket retracement. So it's a great place to look for a short. And these would be swing shorts. Anywhere in this area is a great place because we are in the premium section of this range. But we have to have higher time frame confirmations to make sure that that short is going to play out. Same thing if we come down here, we are from this low to this high is your range on the lower time frame. And same exact scenario, but flipped. If we come down here in this section, this is going to be your discount section. This is where you want to look for the highest probability long scenarios. So if we zoom in a little bit more and check out what happened yesterday, unfortunately, I missed this pump by a hair. I closed the charts right before it happened. We had a small, tiny 5 minute order block, and it was, I believe, a 33R trade from that order block that was right here. We had to come back, we had to break out, come back, and it's the same thing. Same exact thing is what I'm telling you on higher time frames. You look at it all the same, and it's no different than an RIMC play or RIMC. You have the range, you break up from the range, you come back down and mitigate this old range for the continuation higher. So that's exactly what we had over and over and over again. You'll see that across the chart. Simple as anything. RIMC. So now that we have pumped up very nicely, of course, there was a little bit of news release and potential talks of tariff negotiation with China. So we had a little bit of pump from that. And now after an expansion, what do we always do? It's range expansion, range expansion. That's exactly how the market moves over and over again. It's a repeatable pattern. It's very easy. There's nothing hard about it at all. So we look at this range. So what are we going to expect here, right? Same things we went over before. We have a range, you break out, come back to the range for another high. Or we range, we break down, come back to this range for a new low. So either scenario can happen. And what we want to see is we want to see the range high and the range low. So this would be your most local high to this low here. And we want to watch for either one of these to break. We want to watch this high for an SFP. You want to watch this low for an SFP. So if we don't have a break, like the RIMC scenarios I was telling you about, we could see a candle and a shallow wick go below this wick, and that would be your SFP. And you'd wait for this to happen. Same thing to the upside. You have a candle, but you see a wick pass through and it closes back below this high or even the previous week high, and then you make your way down. So those are the long and short scenarios for a local play, as well as the medium time frame, as well as the high time frame. So if we get a little bit more detailed and nuanced to it, we have our levels and order blocks. And these are going to tell us where we want to focus on high probability trades. So we have the order block that I posted this morning. We did have a short trade from it. Now we're in the order block that we had inducement on, and it's currently looking like it might actually play out to a decent long scenario. However, we have been ranging, and right now this is your high of the range, low of the range. So all of this is just internal ranging. So it's micro plays. You're not going to get very good setups, high probability setups in the middle of a range. So that's why I was saying, watch for your high to either swing failure pattern, watch for your low for the same thing, or watch for the high or low to be broken and then a back test. So we do have this scenario here where we have broken structure here, and we can potentially have a decent short to play down. But I would not take this without really, really solid confirmations. And if we throw our fixed range volume profile in there, we see that the point of control is a little bit higher at this block. Let's test it at the very, very high. Same. Let's go to where the pump started. Same. So this is your point of control. We have the VWAP right here and this gray line coming through. But we also have that strong daily level right here along with the PD high. We all know previous day lows and previous day highs. If this is your previous day high, you're always going to see price play around here, try to fake people out. And will it come back into value or will it bust away from value? So these are several things to watch. But again, don't forget, you are in the middle of a range. In the middle of a range, you will get chopped up. We need to trade from the extremes of this range. That was the reason for this order block here. It's in the extreme area of this range, extreme discount. And then we have the extreme premium section. So that's why this short worked out. And this long might actually continue us up. And this might just be a lower time frame fake break. So especially with FOMC coming here in a couple hours, we're probably going to get a lot of volatility. So, or we might not get anything. It might just be a boring, boring day with boring price action. We're getting a nice reaction currently from that level. Very nice. But very early in the game to say if that's going to really do anything. Market buyers, aggressors can come right in and shove this much higher. Something else I want to point out is with SFP this area, we might want to see that wick come all the way into this daily and then close back below. If we get that, that's going to be a short all day long for me. So what I would want to see there, again, is a candle like this, but a wick come all the way up and hit these two levels, but yet close either below the previous week high or close below this local high. If we close below both of them, that is going to be a very, very strong short for me. I will take that any day of the week on the close of that candle and any other confirmations, maybe like a CVD divergence or a market structure flip. So that's the basics of these setups today, the macro, the medium time frames, and the micro. I would probably not touch the micro time frames too much, like the 10, 5, 3 minute, even the 15 minute that we're on. I would really want to see it bust out of this small range and give us a better, higher probability trade, a little bit lower or a little bit higher, because we have liquidity sitting below this low and above this high right now, and we have a lot of it. So, with that said, set all your alerts, watch your levels, and trade the plan.